One of the reasons why we're running this risk of inflation is because so many people are really scared of the prospect of deflation. Why is deflation so much more difficult to manage than inflation?
I think the examples of the 1930s and of Japan really illustrate that well. If you get into a situation where people are expecting prices to fall, it sometimes can be very difficult to break that expectation cycle. This is what's happened in Japan over the last 15 years. People expect prices to fall, the central bank hasn't been able to fight the deflation, and you've had basically economic malaise for 10 to 15 years. In the 1930s, whether it was in the US and the UK, you had a sharp contraction of the price level that led to a lot of economic dislocation. It led to increasing debt burdens, because when the price level falls, if you have debt that's £1,000, you still have to pay £1,000 even if the prices that you're charging for your goods and services has gone down. That means that the real debt burden goes up and makes it more likely firms go bankrupt, that they can't get out from their burdens. So those are the really big costs of deflation. The expectation of deflation that leads people to put off purchases because they expect prices to go down, and then this so-called debt deflation problem where firms can go bankrupt because they're getting the prices for their goods and services are so low compared with their debt burdens.
But isn't there an argument then that maybe the central banks are being a little bit too hands-off in inflation, because the reverse of what you say there is inflation's actually quite good for the growth?
Well, no, you don't want to go too far on that side either, because if you have unexpected inflation that's high, then people won't want to provide those loans in the first place, because when they're repaid, they're going to be repaid with the value of pounds or dollars that are worth less. And so you've got to get the balance right. You've got to have you've got to avoid the expectation of deflation, but you don't want a significant inflation, because that also disrupts the investment process. And I think that central banks feel that the experiences that they understand much better from the 30s and from emerging markets, the experiences from Japan, and that have led them to more clearly see the challenges of deflation and the greater independence and the additional tools like interest on reserves that led them to see that there may be more ways to try to work their way out. So from a risk management point of view, there seem to be higher costs on the downside than having costs moving a little bit on the upside, and so I think that's why the balance is more towards trying to fight the deflation.